Hello and welcome to Big Deal. I'm Nisha Podar, and on the show today, we will put the spotlight on Norwest Venture Partners and its overall view on investment themes in India and the strategy for the current year. Let me welcome on the show Niren Shah, who heads the India business for the firm. Niren, always a pleasure to welcome you on CNBC TV18. First, let's begin by trying to understand what's the strategy for the firm in India right now with so many different changes and so many moving parts.
So firstly, thanks so much for having me on the show today. Nisha, always a pleasure to be here.
Thank you.
So as you know, we've raised a $3 billion fund very recently, Fund 17. And part of our strategy right now is to sort of focus much more on growth equity and late stage venture. So what we do is typically we're sort of investing approximately $250 to $300 million every year, which we plan to continue to do for a while.
Yes.
And our entire focus is to build sort of great companies which can go IPO in India, in a period of about 5 years or so.
Right.
So that's really kind of the focus. It's across sectors, it's multi-stage, it's multi-asset. So we'll do some venture capital as well. We'll do a lot of growth equity as well. And we're looking at ticket sizes where we'll invest between like $30 to $100 million.
Right.
In terms of private equity, it might be a little smaller in terms of venture capital, like $20 to $50 million. And eventually the goal here is to really focus on helping the company to navigate and get to the public markets.
Right. So you said public market and IPO so many times. Let's address the elephant in the room then, Niren. Swiggy has filed for an IPO, and you're an invested company in that particular portfolio company of yours. How do you see the prospects and the way forward for this portfolio company? It's a very anticipated IPO.
So firstly, it's Swiggy has filed confidentially for an IPO. I can definitely confirm that, but because of that, I can't sort of speak on a lot of things. I can tell you that, look, we had invested in Swiggy long time ago in 2015 when, Harsha was a small startup founder and the company has scaled very nicely over time.
Yes.
They were pioneers in 2014 in the food delivery business. They were pioneers of the sort of grocery, what's called Swiggy Instamart in 2020. And, they just, it's been an exceptional relationship for us with a company like Swiggy. So,
Right.
So it is an anticipated IPO and, it's a household name. So I'm waiting for sort of this blockbuster to come out.
Right. And with your more investment and more funds in your hand, would you invest in sectors like Swiggy? Because you have a lot of financial services, you have SaaS, you have logistics, so it's quite widely spread. But would you look at these kind of purpose-driven, tech-driven essentials now that it's become an essential service also after COVID in some ways?
So, the market size in these businesses, because of our sort of vast GDP here, right, the market size of consumer and tech-driven businesses is massive. So we will continue to do that. I think we are investors in some of the other tech businesses. We are in ExpressBees, which is a very large, a packages delivery business, which kind of plays on e-commerce. We're investors in Amagi, which is like a SaaS business. We're investors in Off Business, which is a B2B, one of the largest B2B businesses. So we will continue to invest in technology businesses, because they're playing a very large market of India. And this market is, clearly growing faster and faster, especially when you compare it with the rest of the world. We are one really bright spot in the sort of global ecosystem.
Right. So let's continue the chat on the exit opportunities first, because there are quite a few IPO candidates in your portfolio right now, Niren. Let's talk about Off Business. What's your view on this business, and with what thesis you invested, and has that bet really shown results over the years?
So this is a really exceptional company. It's founded by Ashish, Ruchi and Bhuvan. This is a company we tracked right from the day they started.
Yes.
And the minute they became profitable, right, we decided to invest in them. I think for FY24, they will be close to 19,500 crores of revenue and 600 crores approximately of profitability. So it's an exceptional company. I think this company has grown almost 8 to 9x actually in the last, I want to say 3.5, 4 years. So this is a company where we've entered in at about $200 million odd, and currently is valued at almost 20 to 25 times that valuation. So, you know, they are basically the largest B2B company. They play in verticals like steel and many others, and it's a technology-driven business.
Yes.
So in a lot of these cases, I think what the whole idea is that you kind of bet on very smart founders who have found a little niche. The market is getting larger and larger. And if you look at their entire market size, it's $1 trillion market. So right now, there's still a very tiny drop in the ocean.
Right.
When they're at about, let's say, $3 billion of revenue, we think that it's like a big business, but it's
Yes.
actually still a tiny drop in the ocean. And this is a story which should compound for many years to come.
Right.
So that's the typical kind of business that we would like to kind of fund, where exceptional founders, very large market size, good margins, profitability, and sort of focusing on becoming free cash flow positive.
Not many used to talk about profitability in the venture capital
That's
space,
true, yeah.
but at least that turnaround has happened. But you think that the time is ripe for the return of startup IPOs, Niren, at this point, because a few of them are almost ready, and some of your companies would be readying up later in the year, next year. So it looks like the pipeline is very strong for the IPOs to come in from the startup space.
I think the IPO startups, and the pipeline is back, right? I think what's happening is there was a disconnection in the line, right, around 2021, where I think a lot of IPOs in India wanted to go IPO based on sort of loss-making companies which had a while to go before they turned break-even.
yes.
I think what we're seeing now, it's a very interesting trend, is that everyone in the startup ecosystem has really sort of understood that the companies need to be not only EBITDA profitable, but also focus on free cash flow.
Yes.
And because of that, we're slowly starting to see that gap between the IPO markets and the private ecosystem and the startup ecosystem sort of coming down. So
Yes.
I think some of the companies are working on their profitability and free cash flow, and so therefore it'll take a little bit of time.
Yes.
But I definitely think that that disconnection, the line has got restored, and you will see more and more companies coming in now and saying that, okay, we'd like to go IPO. The other interesting thing, which I don't know if you're aware of, but it's very interesting that in India, when you look at startup sort of venture IPOs, or when you look at venture exits,
Yes.
right? In the US, you find a lot of these M&As, right?
Yes.
And big companies come in, and a Google comes in and buys it for a couple of $1 billion.
Yes.
In India, those M&As have yet not showed up.
We'll
right?
talk about that bit a little later,
Okay.
but I want to also continue the discussion on the IPOs. You spoke about the free cash flow, profitability. Now, these are new concepts which the startup world understood after the first season of the IPO got completed. And there have been many learnings. Now,
Right.
this is well imbibed. As an investor, how do you prepare your portfolio companies for IPO preparedness going down the line? Because that's a very critical part of the exit mechanism, especially in India, where there are no other options.
Correct. You've nailed it, Nisha. I think the whole idea here is our entire thesis is kind of 5 years, sometimes 7 years to IPO. So as soon as we come into a company which sort of has intended to go IPO, we start by preparing the company just in terms of, for instance, governance, risk, compliance. It's a very, very important part. If you want an IPO-able company, the company needs to have these things in place, in terms of independent directors, in terms of predictability of revenue, in terms of sort of making sure that there is a proper set of board meetings, governance issues, processes, internal controls,
Yes.
right? Audits, things like that. So it's a process, right? Even just in terms of having a great CFO, focusing on free cash flow, the
Yes.
ability to be able to forecast.
Yes.
I think we spend a lot of time in preparing companies, and I'm happy to say that the entire startup ecosystem is moving in that direction, because they've recognized that what all of you want in the IPO markets is all of this.
All right. So a lot of learning and a lot of preparedness that is really taking place. But a fair bit of your portfolio is in the financial services, SME, specialized lending space, which is probably readying for an IPO or for you to monetize and exit. Give me your sense on your, optimism on this particular space.
So look, financial services is still very underserved.
Yes.
Our sort of market size is about 2 trillion compared to 36 trillion in the US and 33 trillion in China. So very, very underserved. Debt to GDP is only 70%. It's 222% in China. So this is a market which is here for a long time to come. We started off by doing some of the banks, then moving to the horizontal NBFCs like, Chola and Shriram. We did very well there. We got some amazing exits, but we are focusing much more on MSME, affordable housing finance companies, and sort of specialized CV companies, commercial vehicle companies. And in there, actually, the market size, the gap in demand and supply, right? Just MSME is about $530 billion, right? So this is a massive demand, demand supply gap. And this is a demand supply gap which is going to run for the next 10 years.
Right.
So this is an area where we found that well-run verticalized companies can really compound for a long time. There is a very large market as long as there are exceptional founders and teams, then this is a place where you can definitely make a strong IRR. So sort of that's been our thesis. We continue to do more deals in that. I think we've done more than about 15 sort of investments in these spaces, and we continue to believe that this is a very, very attractive space.
All right, so you're bullish on this particular space, but Niren, of course, the big banks have kept a certain strata of businesses underserved because of the acquisition cost being very high. Technology probably gives the advantage to some of these new age companies. But collateral, is that a challenge? Is it more organized now? What's your view in terms of the level at which it is? Growth potential is huge as India grows, but at the moment, what could be the challenges?
So I think one of the biggest challenges here is that, at least on the sort of fintech side, right, and the unsecured personal lending side, I think the companies have begun to realize, which we've been doing for a long time, that regulatory compliance and sort of making sure that credit underwriting is robust, these two things are very critical, right? So whenever we come into some of the, unsecured lending companies or fintech companies, the first thing we put in is a layer of compliance and regulation to make sure that they are completely in sync with what the laws of the land require, what the RBI requires. So that once it's done, it's kind of treated like a very strong NBFC, which is, compliance first. And the minute you do that, I think the market really opens up. Of course, this is a credit business. So you have to be very, very strong in your credit underwriting. And I think if these two things are sort of kept in, in cognizance, these companies become good companies, right? As regards your secured lending question, we do a lot of secured lending companies. We've got companies like 5-Star, SK, Veritas, Vastu, Finova. These are all in the secured lending space, and that again is a very exceptional space.
All right. So these are the basic points, but I would say that specialized lending and also reaching out to the underserved market in financial services is one of the hot sectors for a lot of investors, including some of the private equity investors. All right, hold on to your thoughts. We'll slip into a short breather on Big Deal and come back for more on Norwest Venture Partners, theme and strategy in India going forward. Welcome back. You're watching Big Deal, and we are in conversation with Niresha of Norwest Venture Partners. Niren, we were talking about one of the important themes that you have already invested in, and the companies are ripe, which is the financial services space. Now, there are many other sectors that you have made investments in. At the moment, when $3 billion have been raised, you may have more ammo at the moment and more destinations to look at. Are there any new themes that you are picking up for future potential? And amongst the usual themes, what are you most optimistic about?
So even within financials, I think we're focusing a lot more on fintech. So that is one area where we're doing a lot more and doing, doing more work. I think that one of the areas we want to double, or two of the areas we want to double down, is on consumer and healthcare. We've had some good investments in the past, and we've also sort of had some good exits there. But consumer, we're just seeing that just the level of growth in the Indian ecosystem. And we're looking at, there are different segments. There is the mass market, there is the sort of mid, mass premium market, and then there's, of course, the luxury and the premium market. But these are doing really very well. And,
Yes.
and across the board, we're sort of starting to see that it's coming of age. We also think that when a country, it's a certain GDP per capita, that really takes off. So we've done quite a few deals, but we want to do a lot more over there. In addition to that, I think one of the things which is very close to my heart is healthcare.
Yeah.
I think that it's really something which we feel is going to, drive the country with so many people. Just healthcare delivery, healthcare tech, or, those are things which we are very focused on. So
Yes.
you will start seeing, again, we've done a few investments in the past,
Yes.
but you'll start seeing us doing a lot more investments in these spaces as well. The last one is, we're looking at manufacturing and China Plus One as a theme. We're starting to see that because of the amazing work done by the government,
Yes.
this is really being seen as a destination in India. India is becoming a destination for global manufacturing. So I think we're at the tip of the iceberg. It's just the beginning.
Yes.
So this is going to be a very long runway for like next 20 years. And so we want to get in early here and sort of try and invest in companies
Yes.
which are sort of, manufacturing for the world.
Right. So manufacturing for the world, yes, that theme has picked up. And recently I heard another theme, that work from India. So that's also picking up. So there is a lot of exuberance, there's a lot of confidence, and private equity and VC money is very, very critical for our for fueling our growth as well. So Naren, when we talk about investments in India, a lot of that is motivated by the kind of exits and returns that you've made. What are your top picks in terms of exits that you've made in India and your experience there?
So we've had a pretty strong exit pipeline, and a lot of those exits have come from two areas. Either it's been going public, IPOs, or it's been through secondary sales, right? So, Persistent Systems, Thyrocare, RBL Bank, Snowman, Yatra, 5-Star, we've done sort of IPOs.
Yes.
And in terms of secondary sales, companies like, of course, NSE, where we had a large position, we've sold secondary there. Zenoti, Capillary, we've sold a lot of companies also in terms of that.
Yes.
We also had initially invested in a couple of banks.
Yes.
And some of those we also exited through the market.
Yeah.
I mean, like IndusInd Bank, Kotak Bank, Shriram City Union.
Yes.
So we've had a lot of exits, I think more than about 25 exits. We've been quite blessed in
Yes.
that regard. And that spurs us on. So, we've
Yes.
been looking at each of these verticals and saying, okay, can we exit some of the financials? Can we exit some of the sort of SaaS and others? Can we exit consumer tech? And once you sort of proving that, look, in this country, we can do that, right?
Yes.
And once you've done that, we've sort of doubled down on those sectors. So that's been the thesis. And you're absolutely right that, exits is something which is very critical.
Yes.
India is going to have to give a lot more exits, right, for that deal flow to come in, for that, sort of massive inflow to come in.
Yes.
And, we've been very focused and blessed in that regard.
So, Naren, of course, the private equity got a lot of confidence because of the last year's block deals and the exit mechanism on the exchanges.
Right.
Of course, VC community got the confidence because after several years of investing, finally the IPO market had opened a few years back. But you made a mention of the mergers and acquisitions, the big ones. India doesn't see much big M&A. What do you mean by that, and what are the solutions?
So as I was saying earlier that, look, I think in the US, when you look at the venture market and the early stage market, what happens is some of these are technology driven things, right? And what happens is somebody, it could be a Cisco, it could be a Microsoft, it could be a Google, comes and picks up these companies for 3 billion, 2 billion, 5 billion,
Yes.
right? And you don't see that much of that in India.
Yes.
So about 6-7 years ago, we pivoted our strategy saying that, look, M&As will come to India, but they will take a little bit of time. We have to ensure that at least between an IPO and secondary sales, you get enough exits. Companies need to get these exits.
Yes.
And I think that while the M&A market deepens, in the meanwhile, I think we need to focus, and everyone is focusing a lot more on the IPOs and the secondary sales, right? So secondaries to other funds, to sponsors, to secondary funds, that has become a meaningful avenue of exits as well. And the reason for some of this is just that the market hasn't developed. Local sort of strategics buying a lot more, global strategics coming in. I think that market will evolve, but it'll probably take another 5 years.
But you have also pivoted to another stage of investment, the growth stage.
Right.
So are you accounting for a large part of your exits through the IPO mechanism, the foreseeable future? There?
We are. In fact, that's very central to our strategy. So we are looking at, like, you know, I mean, if you look at all our companies today, we said there are 19 of them which are profitable, right? I would expect that close to 15 of them might actually look at, you know, filing in the next 3 years. So that is actually the hallmark of our new strategy, which is like, you know, what we call NVP India 2.0.
Yes.
Since about 6-7 years, we said that, look, M&A exits are hard to come by, and therefore we're focusing a lot more on late-stage venture companies which can go IPO, or growth equity companies which can go IPO. And look, the Indian IPO markets, they're doing pretty well, because we think given this is such a nice time for India, the next 20 years, right? And of course, there will be things which go backward also, but largely it's such a vibrant time for India. We expect that the IPO markets will more or less be more open than closed. Right? So we are actually quite positive on that, and that's sort of the cornerstone of our current strategy.
You know, the equity market's doing so well and the IPO market also booming has become one of the constraints for the deal street as well. And the kind of discrepancy that we have seen in the private market and public market valuations had really halted a lot of conversions when it came to deal making. So that's one of the also big reasons. But how do you see the venture capital world from your point of view right now with some of the changes, interest rate cycle turning? That particular milestone has been pushed. The wishful thinking probably at this point is just not coming true. That along with the liquidity coming in from the US especially, and at the present moment, the private market scenario. How do you see the venture capital, you know, industry and the fundraising ability of the startups?
It's a really good question. I think that if you look at the long run, right, India, and given sort of the government's push also, right, this is going to be the startup capital of the world long term, right? Now, when you look at 2021, there was a big bubble. And we are still dealing with the outcome of that bubble. There is some moderation happening in the valuations. Globally, interest rates have gone up. So it has sucked out the capital. And I think what's happened is, while the very early stage is continuing to flow, I think when you look at companies which are above $1 billion, they're sort of, it's been a little more difficult to get funding. A lot of the crossover funds, hedge funds, they've sort of not been operating. So that's also taken away a little bit of the oxygen. I think as the interest rates start going to decline, you know, start declining from maybe 8-9 months out, globally and probably in India as well, I think you'll see some of that resurgence. But I still sense that the same level of valuation may not come back, you know, which you saw in this bubble period of 2021. So it's an industry which is sort of regrouping. I think it's moving. You're starting to see some green shoots. I think over the next 6 months, you'll see some very solid green shoots.
All right. So in a short period of time, some solid green shoots are going to be visible. But of course, there are many macro factors that are really defining it. Nirensha, always a pleasure to welcome you on CNBC TV18 and have your views on your portfolio companies, India theme, as well as the investment strategy. Thank you so much for joining us here.
Thank you for having me.
Thank you. And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in, and keep it with CNBC TV18.